Hello friends, welcome to this video on mutual funds distributors examination. I have received requests from many viewers that I should create a video on mutual fund module as well. Considering that many of my students are also writing mutual fund exam, I thought I will create a video. So this is the video that I have created, which is on the legal structure of mutual funds in India, which is part of chapter 3 of the distributors module. In this video, you can work with me on 20 multiple choice questions. Some questions obviously out of 20 are also true and false. So without wasting time, let us move to the question number 1. Under which of the following legal structure is a mutual fund set up? Well, mutual funds are a trust and they are created as a trust to protect the interest of unit holders. So the answer to select here is very easy. We will go with the trust. Uh, Mutual funds have trust who, since unit holders do not have voting rights directly in most of the decision making process, so there has to be a trust which will take care of their interest, right? The question number 2, mutual funds cannot invest in real estate assets. Well, what we know typically is that mutual funds invest in equity, they invest in bonds, they invest in gold, but let me also tell you here that they do invest in uh, real estate asset also, as a result of which this statement is false. Okay, so they do not invest in houses and commercial property, but they invest it in some different form, like a real estate investment trust. Correct. So we have two questions done already. Which of the below mentioned statement is not true about mutual funds? They are established as a trust is something which we have already tested. We know that. It raises money through the sale of units to public or section of public, which is also true because that's the source of funding for a mutual fund. The units are sold under one or more schemes. Well, mutual funds may have multiple schemes. Mutual funds can provide guaranteed returns. Well, they can't provide guaranteed return. That's why what we hear is that mutual fund investments are subject to market risk. Question number 4. To perform the trusteeship role, individuals may be appointed as trustees. Yes, they can be. They may be. So the answer is true. Next question is, which of the following entity appoints custodian of the mutual fund? So custodians play a very important role. They have custody of the security which is invested by AMC, and additionally, custodians also take care of various activities such as corporate action. So custodians are appointed by an entity called as the trustee, which also takes care of the interest of the investors, right? AMCs and SEBI do not do this act. Question number 6. Net worth of a sponsor is calculated as difference between share capital plus reserves minus what? Can we deduct provisions? No. Assets? No. Receivables? No. So what do we deduct? We will be deducting accumulated losses to arrive at net worth. Question number 7. The sponsor of a mutual fund should be carrying on a business in financial services for how many years? I mean, you need to be active working in financial services industry. Okay, so the number of years that we have here is 5, correct? So these are the 5 years. Fine. Question number 8. Which of the following asset is not included in liquid assets? So if you have to calculate the liquid assets, you will consider cash, you will consider repo, you will consider treasury bills, but you will have to exclude physical gold because physical gold is not liquid. It's difficult to liquidate it, right? Question number 9 is, mutual funds are constructed as trust in India. Who are the beneficiaries of the trust? Who will get the benefit? Are they employees? Are they mutual fund distributors? Are they unit holders? Are they trustees of the mutual fund? Well, the answer is unit holders, right? We move on to question number 10. Sponsors should have average net annual profits after depreciation, interest, tax and tax during the immediately preceding 5 years of at least how many rupees, right? Well, the answer for this is they should have it for at least 10 crore rupees. And this is a fact-based question. So there is, rather it is a regulatory requirement. So there is nothing that changes here, right? So we have completed 10 questions so far. I hope you have enjoyed this journey. We'll move on to question number 11. One person can be trustee of more than one mutual fund. Whether it is permitted or not permitted, well, it is not permitted. So the statement is false. Let us move to question number 12 now. The sponsor will have to appoint at least how many trustees? Okay, so sponsor will have to appoint at least 4 trustees. That is what is the answer here. So we'll go with the 4, right? Now, this being the case, we move on to the next 113. Which of the following should ensure that there is no change in the fundamental attributes of any scheme? So, fundamental attributes of the scheme should be maintained in all scenarios. They should not be changed. That is something which has to be ensured by an entity called as trustee. Trustee has to take care of this part, right? Asset management company is managing the fund. Okay, custodian is taking care of assets which are invested by AMC. Registrar and transfer agents basically take care of issuance and redemptions of units. Question number 13. At what frequency should the trustee file reports to SEBI? Well, the answer is half yearly, correct? So they should file it at a half yearly frequency. Question number 15. The asset management company need to have a net worth of not less than how much crore deployed in assets as may be specified by the board to be effective from 1st January. Well, this amount is slightly bigger amount, and that's why we are going with 50 crore, which is as provided under the law. Question number 16 is what we can go through now. So 16th question says the appointment of AMC can be terminated by majority of trustee or by what percentage of unit holders. So you need slightly higher representation here. It cannot be just a simple majority, so it is 75%, which is the option B. Question number 17 is which of the following entities is responsible for managing the corporate action? Not just the corporate action, but managing. I have already kind of explained this. It is the custodian. So custodian is responsible for various acts that has to be taken care of by it, including custody of the assets. Which of the following entities prior approval is required before a person is appointed as a director on the board of AMC? Well, if that being the case, it is the trustee which has to give this approval. Okay. The next one is SEBI expects trustees to perform a key role in ensuring legal compliances and protecting the interest of investors. Okay. And last but not the least, the 20th question is what percentage of directors of AMC should be independent directors? Why do we need this to be in place? Because there should be fairness and transparency. The number is 50%. So I have taken you through 20 questions rather quickly in less than 9 minutes. I hope you had a wonderful journey working on these questions along with me, and I hope these questions will help you to prepare for exam also. Thank you so much for your valuable time. Do not forget to subscribe to this channel and like this video.